Now, did you know that your crypto gains are on the IRS's radar? The IRS has created a number of initiatives. For example, like Operation Hidden Treasure, as well as hired a bunch of crypto industry veterans to help combat crypto tax crimes and increase compliance and reporting for average taxpayers. Now, if you're trading Bitcoin, Ethereum, or even your favorite meme coin, you cannot afford to miss this. Stay tuned for everything you need to know when it comes to crypto taxes for 2024. Hey there, crypto enthusiasts. My name's Eric Niem. I run an accounting firm that focuses on the accounting and taxation for cryptocurrency companies as well as investors. Today, we're gonna dive into the world of crypto taxes. I know, super fun, right? We're gonna cover the basics, common pitfalls, and how you can stay compliant without losing your mind. Let's jump right in. Now, first things first, what counts as a taxable event in the crypto world? Now, every time you sell, trade, or even spend your cryptocurrency, it can be a taxable event. The IRS considers cryptocurrency to be treated as property for tax purposes. Let's look at an example. Let's say that you bought Bitcoin at $10,000 and then you sold it at $30,000. You then made a capital gain of $20,000, and this gain is going to be reported on your taxes as a capital gain. Now, additionally, if you use cryptocurrency to purchase a good or a service, the sale of the crypto to make that purchase can also be subject to capital gains tax. But it doesn't stop there. Did you know that even swapping one crypto for another is taxable? Let's say you traded Ethereum for Cardano. You need to report any gains or losses from that transaction or that trade as well. Just because you didn't cash it out or put that money into your bank account, it does not mean that there's no tax. Now let's talk about tax rates. For most taxpayers, short-term gains, which is defined by assets or property held for less than a year, are taxed at ordinary income tax rates, which could be as high as 37%. Long-term gains, which are meaning assets that are held for longer than a year, enjoy typically what we call a lower rate, ranging from 0 to 20% depending on your income. This means that if you could hold on to your crypto assets for longer than a year before selling, you can pay a lower tax. Now, what about staking or earning interest on your crypto? Yes, those are also taxable. For example, let's say you earned $500 worth of cryptocurrency from staking another token, and now you're getting staking rewards. You need to report that income as ordinary income or as interest income. It's taxed at ordinary income tax rates. What about if you launched a project or did a pre-sale token? Let's say if you launched an NFT project, for example, you're operating a business and that income is also subject to income tax. You're going to want to keep track of your expenses, and also the income after expense is subject to your ordinary income tax bracket. Okay, now that we know what's taxable, how do we report all of this? Let's address the elephant in the room. The IRS requires you to fill out Form 8949 and a Schedule D to report all of your capital gains and losses. Now, there are excellent crypto tax software tools that we use, like CoinTracker and Coinly, and these can make your process much easier by integrating with your exchange accounts and all of your wallets to automate how you do the reporting. Now, to make sure you're in compliant and staying out of trouble with the IRS, you want to keep meticulous records of all of your transactions. Luckily, exchanges like Coinbase and Binance provide great transaction history reports, which are super helpful. Now, a great example of capital gains when it comes to a corporate side of things is Tesla. Now, Tesla was well known for holding a large chunk of Bitcoin on their balance sheet in their holdings back in 2021. And famously, or well known, they reported their gains when they sold that Bitcoin, just like any other asset sale. Now, this shows that even large corporations have to follow these rules, so should you as well. Now, if you found this video helpful, make sure to give it a thumbs up and subscribe for more crypto content. Don't forget to hit the bell icon so you never miss an update. Now, do you have any questions about crypto taxes? I'm sure you do. Drop them in the comment section below, and I'll be sure to answer them for you. Let's conquer crypto taxes together. Now, thanks for watching, and remember, staying informed is the best way to keep your crypto gains safe, compliant, and out of trouble with the IRS. And until next time, happy trading and stay savvy.